Today I have something nice to say, so let's jump straight to it. The odds that S&P 500 and NASDAQ would bounce up in the next 2 weeks look exceedingly good to me. At least that's where my trade money is out. I'll show you details in a while, so stick with me. But it's still at the end of the day a trade, which means I will be selling at a profit at some point of time, or I'll be cutting losses if I do get it wrong. Markets are, in my opinion, still entering a bear market. This is not likely a correction. I guess many are afraid of calling it a real bear market, but that's my interpretation of things. Not that we should be selling everything and running away, but also, in my opinion, a bounce has been long coming, and I'll show you some details using some fear and greed indexes. But at the end of the day, also, nobody has a crystal ball to things. So what you hear today, you see whether there are ideas that you agree on and how you want to execute your own game plan. This is actually how I read the VIX index. VIX is actually a volatility index, and it's popularly used to understand market sentiment on fear and greed. So if you see what has been going on the VIX index, you realize that VIX has been spiking over the last few weeks, correct? Ever since end of April all the way to until now end of May. And correspondingly, S&P 500 has declined, as you can see in the yellow graph below. Now at this juncture, I want to pull you to something. Do you realize that the VIX index hasn't broken a new high? It seems, in my opinion, to be losing strength. And if you compare to what has happened a couple months ago, you realize that the VIX skyrocketed ever since there was news of war coming in Ukraine, and it went all the way to 120%. That was reached in 7th of March 2022. And at about time, markets were crashing rapidly. And what you can see also is from 7th of March all the way to 11th of March, the VIX, which is a volatility index again, saw a decline and never went back up again. And subsequently, many termed this as bargain hunting, which is why the market has rallied from 14th of March all the way to 29th of March. Now at the point of time, I also had a video saying that there could be a subsequent market low, and many were not too pleased about hearing that news simply because they had investment positions. But at the end of the day, I'm just sharing with you what I see in the market. You hear the interpretation, and hopefully we all stay objective about it. And I've actually something interesting to show you. This is actually VIX against two other inverse ETFs. Inverse ETFs means they buy the opposite direction of the main or the core underlying ETF. Two names in particular. The first is Tuttle Capital Short ARK, SARK. Then the second one is ProShares Ultra Pro Short QQQ, which is with the ticker SQQQ. You see that the correlation between these two inverse ETFs and VIX seem to have a very strong correlation, simply because they all trend up when people are selling off. And in my opinion, at this point of time, it's probably not a good idea to be in either of these two names. I've heard before on comments that some who are heavily invested in US tech have bought SQQQ as a hedging process. And my general feedback is that it's as good as selling away, because you are long on a lot of tech names and yet you're short QQQ. The inverse relation is pretty strong, so it's as good as selling. On the other hand, I'm in commodities and REITs and a lot of Singapore small cap stocks, so it's actually very different. But in any case, when you have a lot of long names in US tech and you short it, I think it overcomplicates the approach. So if you ever had that question, maybe this has given you my point of view on things. I have a further chart to illustrate things. This is another fear and greed index which I've shared on the members channel. In any case, if you're keen on it, check the links for the members channel below. I've actually released this a couple of days ago. What I shared is that at any moment when it gets to extremely depressed state, there is a gauge. Anything less than 25 is extremely fearful. Whenever you get to that state, for a couple of weeks, that's where markets tend to get oversold. And that's where I've highlighted over here. After a few weeks of extremely fearful, this is a phase typically that market can spike up, especially in a bear market situation. It is not that when markets are fearful, you get greedy straight away. It is only after prolonged periods of selling, then you'll see bounces. And markets will not go to zero. Even if it trends lower, you'll not see that it'll go in a straight line downwards. I mentioned in the last tutorial, when markets are on a bull market, they trend up slowly and correct massively. Conversely, in a bear market, it goes down, it drifts down for a long period of time and spikes up and drifts down. So it's the opposite direction. So what we can see is a spike up typically would happen, and quite possibly it could go to a moving average. And that's where typically new traders jump onto the bandwagon, or new investors have this fear of missing out and think that it's a new bull, and realize that they are on the wrong side of the overall trend. So how am I going about this whole trading execution idea? Let me show you something in WeBull. This is a new platform in any case, and they have new sign-up rewards. $60 Apple shares if you have deposited $2,000 and made a single trade. I've actually done so a couple of days back. And not just that, I've topped up an additional $8,000, as you can see over here, on 25th May 2022. And the deposit seems to be almost instant, because this $8,000 extra has been credited in already. I've used the first $2,000 to buy TQQQ. In any case, this is not a product recommendation. Make sure it fits your risk profile, because I won't be able to follow up on when I actually dispose of this trading position. TQQQ is a 3x of the QQQ index. So I've actually built up the position to be slightly larger, deploying almost a full $10,000 by adding more units of TQQQ. As of right now, I have 250 in quantity, and WeBull's promotion is if you do 5 trades, you get an extra $40 off Apple shares. So if you haven't signed up, look for my referral links below, and as always, drop me any questions you may have regarding the platform. But the main part is always on sizing. If you are trading, make sure you're not over leveraged, and make sure that the amount that you are deploying for trades is something that is comfortable with you. Since you stuck with me till here, I have a key ending point for this whole discussion. Right now in Davos, there's this convention between the uber rich and those that are influential. You realize that the tone to me feels a bit more serious than in yesteryears. Countries are defending their decisions to make bans. Countries are calling for aid for the war, as well as in North Korea. Countries are concerned about China. And someone whom I researched quite a bit when I was younger, George Soros, has made some pretty serious remarks, such as global inflation could bring a worldwide depression. So in subsequent videos, I'll be sharing with you what to do in a bear market. And also be covering the topic on recession, what you can look forward to in terms of building your wealth in a recession situation. And last but not least, I'll also be sharing with you my biggest learning lessons investing through 2007 to 2009 global financial crisis. What did I do wrongly then? That's helped me reshape my approach towards investing and getting results along these last few years. So if you're keen, smash on subscribe and smash on the like button for this so that we can reach a bigger audience together. As always, invest safe, prepare for the worst, but always stay optimistic. With that, I'll sign off from this tutorial. Take care and goodbye.